India's central bank has kept interest rates at a record low to support the economy. The Reserve Bank was expected to signal a path back to pre-pandemic policy settings. But even with inflation running at nearly 6%, it decided to stick to a loose monetary policy until economic recovery is firmly entrenched. Rebecca Bundan with more.
Given the concerns about the ongoing economic risks posed by the pandemic, the Reserve Bank of India, or RBI, refrained from raising interest rates despite high levels of inflation. Some economists had expected a hike in the reverse repo rate, which is the rate at which the central bank borrows from banks, but that was kept at 3.35%. The RBI's decision came against the backdrop of the Omicron-driven surge in infections in India and globally. This has been a setback for India's economic recovery. The RBI's Monetary Policy Committee, or MPC, therefore wants to support growth by keeping interest rates low for consumers and businesses to borrow at.
Overall, taking into consideration the outlook for inflation and growth, in particular the comfort provided by improving inflation outlook, the uncertainties related to Omicron and global spillovers, the MPC was of the view that continued policy support is warranted for a durable and broad-based recovery.
Retail inflation in India came in at a 5-month high of 5.59% in December, which is at the upper end of the RBI's target of keeping inflation between 2 and 6%.
I know there was a temptation to increase or change interest rate given inflation one side, and UK bank, the Bank of England, have raised interest rate, and the Fed bank is planning to increase the interest rate. There's a temptation from that on that side as well. But what is happening today that India is not ready for any of the rate hike.
The RBI expects inflation to moderate as supply side constraints ease and with food prices expected to come down. The central bank, however, did warn that higher global crude oil prices are a concern, and this is a risk factor it is monitoring closely, given India's dependence on oil imports. Assuming that the economic situation improves, economists see scope for the RBI to start raising interest rates later this year. Rebecca Bundan, CNA, Mumbai.